welcome back to my channel. I am here today to talk about my trading system and my results that I have. In the past 2 years, I have gotten over a 100% return in my stock options portfolios trading my stock options system. In addition to that, my account size has grown significantly, and I'm able to make $30,000 to $60,000 a month trading the system. My portfolio size is less than $600K, and in this last year, I made over $400,000 trading stock options. So those are some pretty incredible statistics. A lot of people find them fairly unbelievable. And I'm also here to say that I know that I can do this again this year. Okay? I don't know that my portfolio is going to be up overall in the year, but I do know that I'm going to be able to create another 400K in income. So this is sort of just a bit of math that I've been able to do, and I'm really happy to be able to just walk you through my system and show you the trades that I do and how I arrive at that number. Okay? So if you wanna stick in there for the rest of this video, it will be kind of long, but I do want to explain how I do this from soup to nuts. Before we dive into the specific trades that I do want to talk about what my system offers me and why I set it up the way that I did. So why I set it up the way that I did was because I'm fairly conservative as a trader, and most of the trades that I do, like 99% of them, have about the same risk profile as a covered call. It doesn't get much more risky than that for me as a trader. Like, I don't want to spend any time worrying about my money. So if I am comfortable with a covered call, and I assume many of you are because you're interested in options trading that are watching this, you're going to like the rest of what I do because it doesn't have much more risk than that. So going to the last card on my deck, because this is the deck of cards I play options with and I play my life with because I trade options. So to that end, I understand the risks of my system and I sleep well. There's nothing that can happen on the market that I'm going to lose sleep over. So that just gives me a lot of confidence going forward in my life and where my money is at. I have time freedom. So again, I only trade a few hours a week, 4 to 5 hours a week. As my account size gets bigger, I don't have to spend more time trading because I just would increase the amount of contracts that I'm doing. So I'm kind of maxed out on the amount of time I'd spend on it too. So 4 to 5 weeks is going to be the amount of time I'm going to spend trading, whether I am making 30 to 60K a month, which was what I'm making right now, or I'm making 100 to 120, which is probably what I'll be making in a couple years. Okay? I make great stock picks. So I have a system to pick stocks, and this keeps me out of trouble with picking bad stocks most of the time. None of us are immune from making a bad stock pick here and there, and that happens, and that's completely normal. You can't beat yourself up about that. But most of the stock picks that I make do really, really well. I get better and better at my system over time. So it amazes me how I only do 7 trades. That's really all I do, and they do have variations of that trade. But I get better and better at these trades all the time. I see little things that I can improve on, and I do improve on them. I've been able to compound my wealth. So a lot of the premiums that I get in, I take and I live off of. Some of them I have to pay taxes with. We all have to pay taxes. But other premiums that I get, I reinvest back into the market with options trading or just long-term holds. So my wealth is compounding all of the time. I'm consistent. So I know you guys are saying like, wow, that's a big swing from 30 to 60. The 60 doesn't happen very much right now. It will in the future as my options account begins to compound more. But 30 to 40 is sort of the range. I know that if the market pulled back, I'd be more on the 30 side for a couple months until I adjusted my trades to go in that direction. And 60 is just like one of those things where it was a killer month. And that does happen to me a couple times a year. So that's just amazing. But I know that I can plan my life within that range from an economic and financial standpoint, and a budgeting standpoint, which to me, that's a lot of consistency. So I don't have losing months, guys. I do not have losing months. I do not have months where I lose premium or I paid out more to trade stocks than I brought in. My system does not allow for that. My portfolio overall can go down. That's true. But being that my stock picks are good, that is a short-term event. Maybe it's a month or two that happens, and then I'm going up again. Okay? And my favorite part of this is that I have, fuck you money, guys. I hate to swear on YouTube, but I do. I have a few money. At this point in time, I don't have to do anything that I don't want to do. And this is great. This is something that's wonderful in my life, in that options has afforded me. I can now do anything I want, and really anything is financially possible. To really be a great options trader, my opinion is that you have to be great at stock picking. If you trade crap stocks, you're going to have crap results. If you trade great stocks, you're going to have great results. It doesn't get any simpler than that, and it's a step you cannot skip. I cannot skip this. So, being that is the case, I have made stock picking into a bit of an art. And I love things that are simple, easy, and fun. Okay? That is my mantra. Simple, easy, and fun. With that in mind, I run my stock picks through some checkpoints. Okay? And the first checkpoint is charts. I am not a chartist, though. I want you guys to be really, really clear about that. This is also why I don't spend a whole lot of time trading. I don't look at charts. I'm not sitting there looking at the price action on a stock on a 15-minute chart or an hour chart or anything like that. I'm not a day trader. So the first thing that I do, if I'm interested in a stock to see if I want to options trade it or buy it for a long-term investment, is that I look at the 5-year, 1-year, and 3-month charts. And if those charts are all up, I'm interested in that stock to run it through the second checkpoint. If they are not all up, I dismiss the stock and I don't look at it anymore. Maybe I might come back 2 months from then and say, hey, this stock has changed a little bit. I'm going to look at it again. But if that stock does not pass the 5-year, 1-year, and 3-month chart test of those charts all going up, I'm done. I'm not buying it. I'm not options trading it. All right? So that's number one. The second thing that I do is I read financial statements. I log onto Yahoo Finance and I look at the year over year earnings and revenue for that stock for 4 years in a row. And I make sure that each one of those line items is increasing every year. If it is, that stock passes another checkpoint for me. If that stock has not accomplished that, I'm no longer interested in the stock. Period. End of story. Okay? This is the simplest thing to do. And it really is a little bit of homework. And it will go a long way to ensure that the stock that you are buying, that the company knows how to make money and keep money. And reinvest money and keep making money. And when they make money, we make money. That's what we want. Okay? The other thing is, I only buy good stuff. I don't trade junk stocks. I trade only the best. The Magnificent Seven, the Dow, the monopolies, the mega caps, the hot industries. I do not speculate if an industry is going to be better in the future than it is right now. That's silly of me. I go where the money already is going. So what institutional traders are doing is insanely important to me. The only reason a stock goes up is because institutions are interested in that stock and the institutions are pushing the stock price up. When they're doing that, I have the flow of money helping me with my options trading and helping me with my investing, okay? So I ride with companies with proven winning streaks only. I don't speculate that a company is going to do better one day in the future than they are right now. That is a waste of my time and energy. And it is a waste of my options theory as well, okay? The last thing, I stay in the know. I follow my stocks. So now I own the great stocks. If I have followed my stock buying system, I now own the great stocks. So what happens if the stock starts sucking? I'm sure that's your question. You're like, wait, but like a stock can go backwards. It can have a bad year. It can have a bad quarter. Absolutely. I am not saying that my stock picks are 100% accurate and every stock that I pick goes up. That is not the case at all. What is the case is that most of the stocks that I pick go up. And when the odds are for me and not against me, that really it creates outstanding results. So, how do I stay on top of this? Basically, I have a Yahoo Finance account. It's free. I have a stock watch list. Any stock that I'm interested in, I follow. And what ends up happening is that I just log into my Yahoo Finance account and read that stock for 10 minutes a day, read about stocks for 10 minutes a day. And I will automatically see the earnings calls come into my Yahoo Finance account, and I'll be able to follow whether the companies that I'm trading are doing good or bad. If I see 2 bad earnings calls in a year, I sell that stock. I'm done with it. That means the company is not doing well, and something needs to happen in upper management or with product design or something to improve the odds of that stock doing well in the future. But I'm not waiting around for them to right their ship. I've already given them enough time after 2 bad earnings calls that I'm out. This may mean I'm selling at a loss. And that's fine because I don't want to create deeper losses. So I'm putting a Band-Aid on the wound here and I'm moving on, okay? Or ripping the Band-Aid off, whichever way you want to look at it, okay? The same goes for stocks with a declining share price that are in a bull market. So there are stocks that I have had in the past that the market is sailing along, going up, 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 and my stock price is either stalled out on a stock that I own or it is going down. That's a bad sign to me, and it's time for me to part ways with that stock. So right now you're hearing about the risk mitigation part of my stock plan, right? So I'm buying the best stocks. As soon as those stocks turn into not the best stocks anymore, I'm giving them like a maximum of 3 to 6 months to turn their ship around and right it, or I'm out. Okay? That's how I pick stocks. There is a YouTube series on this that is called Investing for Financial Freedom on my YouTube channel that goes into this stock picking system in great detail. It's about 8 videos. It's probably about a half an hour long. It's too much to go into here, but this does get more elaborate, and it is also simple, easy, and fun, and it will take you probably about 4 minutes tops to evaluate whether I think a stock would be a good buy or a bad buy based on the system. Okay, we're jumping into the trades that I do to get my results. The first trade and the most important trade is the covered call. This is just a beautiful trade. I love this trade. So any of the long-term holds that I have, I am usually selling covered calls on those shares. And I am using 4 different variations of that trade to maximize my results. So there are so many different ways to modify this trade or to use different strategies, I'll call them, to really amplify your gains here. So the first one that I love to do, and it's my favorite, is the fast money trade. So here I sell covered calls without worrying about delta or any of the other tricky Greeks. I grab the highest premium that I can while I also ensure that I get a capital gain if my shares are called away. If I'm really lucky here, I'm also able to collect a dividend on a stock that pays a dividend if that ends up being over the time period that I'm holding these shares. So this one is a real winner. It also helps me reduce my cost basis a lot on shares. The second one that I'm doing is a volatility trade. So you can pair volatility in a stock with a covered call. Like that's something that you can do, and that's something that I do. So this trade starts with buying the shares on sale on a dip, patiently waiting for a rise in the share price, and then I sell a call from there. And the result is that I get premiums and gobs of cap gains when my shares are called away. Okay? You can notice too on these 2 first trades that I've done here, I don't care if my shares are called away. If I was attached to these shares being mine in any sort of way, I wouldn't make as much money as I do. That's just to be completely honest with you. So I don't have an emotional attachment to any of my shares. It's called stock trading for a reason. I am trading money for shares, and I'm trading them. They're not mine. They're trades. Okay. The next trade that I do is get paid going up. So if I want to hang on to my shares, and see them appreciate over time and collect premiums along the way, I apply this trade. That's kind of counter to what I just said, that I don't care about my shares being called away. And that's true. Like whenever I sell a covered call, I know that they could be called away. But there are times where I do hope they won't be. So when that's the case, I apply this trade. While many traders out there look at delta to determine a strike price and what they're going to sell that call for, I don't. I have a better way. I do like a quick chart read on this. Now, again, I am not a chartist. I'll say that again. I'm not a chartist. It's just that I have ways that I can sort of determine, one, what the best day would be to sell a call and when I shouldn't sell a call, okay, on my shares. That's really important. And then outside of that, what my strike price should be. So I'm going pretty far out of the money here, okay? All right, and then the last one is the earnings trade. So, there's people who think they're very wise and they say stay away from earnings. And that sounds like sound advice unless you know a foolproof way to play these volatile events and turn it into a cash cow. And I do. So here I am really relying on implied volatility crush to be my friend, to pay me out a huge premium the day of earnings, and potentially also capture some cap gains if I get called away, or if I don't get called away and I've done an earnings trade. This covered call strategy is just killer. All right, we're going to move along into credit spreads. So this is an area where I feel like I have a lot of edge. I've really done a lot of thinking outside the box to develop my trading strategy here. I have trained quite a few traders over the years, and a lot of them are blown away. Mind's blown when they figure out what I've done with call credit spreads specifically, okay? I have a lot of secret sauce with call credit spreads and a lot of tricks and backup trades that I can do to manage the situation, to keep myself constantly in profit and constantly bringing premium in. I do not have this same level of sauce with put credit spreads. So I do those minimally. And I have more of a tendency to lean into call credit spreads because they work out so well for me. Okay, so the first trade here is the bear call spread. Classic bear call spread. This trade allows me to print money when stocks are going down. And for me as a trader, once I knew how to trade in both directions, I was just unstoppable because it doesn't matter which way the market goes, I still make money. Now, I will tell you, there is a bit of a hiccup here for me, and that is just that when the market changes and the market is going bearish overall, like it did in, 2022? There is a time period, like a month or two or three, where you have to adjust your trading strategy, and those months aren't so pretty. Like, I'm not saying that I lose money those months, I do not. But my portfolio goes down and I have to readjust my trading strategy. And because I trade with a minimal amount of time per week, I trade my options in longer dated time periods. So because they are longer dated, it takes me a longer time period to adjust going a different direction. That might sound like a negative, but it is actually a positive. Okay, the next thing about my call credit spreads is that I never close my spreads out for a loss. So other traders might send up like 10 call credit spreads because their account allows for that amount of collateral. And then if the trade works against them, they have to close that trade for a loss. Not me. I have a backup trade, but there is a catch. While I could set up maybe 10 of those trades in my account because I have the collateral to allow for it, my backup trade doesn't allow me to do that. So I go slower. I will do maybe 2 credit spreads at the same time, but I'm guaranteed to get paid and I'm guaranteed to make more money on my backup trade. Okay, so I have to adjust that trade. That's fine with me. All right. All right. The next thing that I do is with my call credit spreads, I get paid to own calls. So if you see on Twitter or on YouTube or anywhere on Instagram where people are buying calls and they're buying these short dated calls and they're winning these little lottery payments, and it's just like, wow, I wish I could do that. I will be the first to tell you that there's a downside risk to that, because when you buy a call and it doesn't go the direction that you want, you've just lost money. Okay? So this was an interesting thing for me to figure out as a trader, because I want to own calls. I want those jackpot wins, but I don't want the downside risk. I don't want to throw money in the market and have it go away, because any money that goes away or that I lose is money that cannot compound for me over a 10-year period and make me into a multimillionaire. Or a decimillionaire, which is really my goal. So let's just go over this. Buying short dated calls is riskier than selling calls. Buying calls is also hugely profitable when it works out. So my predicament as a trader was like, how do I work that system and get it to work for me? Okay, so what I did was that I used call credit spreads as a hack to get the best of both worlds. And what I do as an advanced options trader is I dismantle my spreads to get there. So if some of you are sort of know a lot about options, this might make sense to you. For others that don't, this is why I have a course, is because this is probably about 2 hours to learn this trade. Okay, so once you get it, you get it, and you can do it forever, but it does take a little bit of time for it to sink in. The last thing is that I have a trade called Erica's Bullish Spread. Years ago, I made a mistake. I set up a trade in my account and it went against me, and I didn't really know how to manage it. So, that was a bit of a bummer day. However, when this happened, it was actually a huge blessing, because I was able to see the other side of this trade. And if I was on the other side of it, that I could strategize on and set up a strategy to make money consistently on being on the other side of that trade. Okay? So I've never seen anybody else trade this trade. I made it up from being on the other side of it. I trade, again, I've taught many experienced traders who just want to learn a couple things from me and take those trades and win from them consistently. And to quote one of my seasoned traders, they were like, it's brilliant. And the thing is it's so easy too. This trade is very, very easy, this credit spread that I'm talking about. So I have like a secret trade that's unique to me, and I am doing this consistently. The fun thing about this trade is that I get paid 3 times when it works out. If I just set up the trade and it works out just a little bit, I get paid probably like $100, $150. If it goes well, I get paid that $150 plus, like, say, another $200. If it goes exceptionally well, I get those first 2 payments plus another $600 to $1,500. So that's how that one works for me. And it's very fun because when it works out, it's just a huge payday. And when it doesn't work out, guys, I'm still walking away with $100, $150. So that's the worst case scenario. All right, leaps. Leaps is the next step in my system. These are call leaps. So we need a bull market for these to work out. Okay? And when there is a bull market, I am taking advantage of the fact that there's a bull market. And I'm trading leaps. These supercharge my account. Okay? When there is a bear market, I remember how, guys, I told you when there's a bear market, I don't make as much money? That's because I can't do leaps. That's really why. I could do put leaps, but I'm a little bit more hesitant to do that for other reasons, which I won't explain. But leaps, when there is a bull market, guys, I am a fan of leaps. So the thing about leaps is that I have to make sure that my stock picks are phenomenal, because they only work on stocks that know how to rise. So I've got to be really careful with those. But there are 4 ways that I trade leaps. Okay, so the long-term hold is one of them. So I buy 75% of the rise in share price of a stock at a fraction of what shares would cost. That's what leaps gets me. That's what a leaps contract does for me. I mean, I can also buy myself 30% of the rise in the share price, or 50 or 60. I get to choose here. It's all just a matter of how much do I want to spend to own that contract. These are year-long or multi-year plays, and quality stock picks here are everything. They're make or break. Okay, so I am only buying the best companies here. The volatility trade. So stocks go up and stocks go down. This is a normal thing on the market, and market volatility makes magic happen. This trade pays me to sleep. I'm not kidding, okay? So I wake up on the right side of the bed more often by ordering my leaps to sell in after hours trading. So this is something that not many people are aware of, but I'm happy to give you guys this info. So you can set up a good till canceled sell order on your leaps contracts, and oftentimes they'll just sell in after hours trading. You'll wake up to a little email or a little notification from your broker that your leaps contract sold for a profit. I do this consistently. I wake up to this very often. It's a great life. I love waking up to money in my account and profits. So volatility is huge. And the way that I play volatility is that I make sure that I don't miss it. And how do I not miss it? I don't watch my leaps contracts and try to guess when to sell them or miss a pop in the stock. I make sure that I set up a good till canceled sell order on my leaps as soon as I buy them and predetermine the profit that I would like to make so that I don't miss a selling opportunity. This allows for me to do leaps more often because if I miss an opportunity to sell because the stock pumped, that means that I have to wait for the next opportunity to sell. So any kind of cash that comes into my account again, I can use to buy another leaps and do the same thing over and over again on a rinse and repeat basis. The Q to Q leap. That's another trade I do. While I'm not a chartist, I can detect quarterly patterns in a stock's chart if there is one. I want to be really clear about this. So what I am actually doing is I choose stocks to trade that do have a pattern because some don't. This is super key. This is as simple as I've done some studying, I've observed some patterns, and I buy leaps in synchronicity with those patterns and cash in 4 times a year in a big way. So I don't know if any of you have seen what I've been able to do with Costco leaps in 2024, but I took the same $10,000 and made $60K from it by just rinse and repeating the Q2Q leap on Costco. Pretty incredible. And I'll do it again this year. Okay, and then the earnings trade. Sometimes the gamble pays off with leaps. So I apply a slight risk for sometimes a colossal reward. And if this doesn't work out as a trade, no worries. I have a backup trade to keep premiums coming in. So I am able to turn my leaps contracts into a backup trade. And that's why I'm never terrified of buying leaps. Okay? Even in the event that we hit a bear market, and I am heavy into leaps contracts. If that bear market goes on for 2 years and my leaps expire, I have a backup trade to break pretty close to even on buying those leaps. Maybe I lose a couple $100 over a 2-year period. I'm going to have to put a fair amount of work in. And when I say work, I mean I'm going to have to roll calls out for an extended period of time. If any of you know what I'm talking about right now. But it's going to be some work, but I'm not going to lose that much money. The diagonal spread is my favorite trade. It takes a little bit of patience because it takes years to play out. Yes, years. It's like the vertical spread, but better. So if you've ever heard of a poor man's covered call, this is it. This is one variation of it. But there's more. I use such an extended period of time on this trade that I cannot lose on this trade. The math is that these are a 50 to 100% gain per year. I'm not kidding about that. It's completely true. My secret sauce here is that I am actually structuring theirs over a 3-year period of time. In addition to the poor man's covered call, we have the rich woman's covered call. So I modified the poor man's covered call, so I got naming rights on it, and it's dubbed the rich woman's covered call on my course. If I'm bullish on a stock and the market is bullish, this captures the gains on two sides of the trade and spoils me with riches. It's like really good to be a girl when you have this trade in your portfolio. The next thing is that my diagonal spread is a backup trade. So I've been talking a lot about the backup trades that I do, and the diagonal spread is a backup trade to a few of the trades in my system. So that means, in my case, my plan B makes me a 50 to 100% return a year. Sometimes it's even more than that. I am being very conservative when I am talking about making a 50 to 100% return here. If the market conditions are good, it can be a 200% return per year. So again, the percent return on this, you might wonder why I do any other trade than this since it's so consistent and profitable. Also, whether the stock goes up or down, my rate of return is still spectacular. It still stays in that 50 to 100% range. The thing is that most of my trades are this trade. That's why I do so well. Most of my portfolio is in this trade. Okay. So there's a ton of other stuff that I do. But it's really quite simple. Most of this is all about risk management. Some things I really maximize in my account and some things I minimize to get the results that I do. So with rollouts, I am doing rollouts consistently and constantly. I'm rolling options all of the time. If a stock goes up, I roll out a covered call. If the stock goes down, I roll that call down. I don't obsess over my strike prices. I just go for it. I trade with multiple contracts of the same stock and vary the strike prices for different results. So when I first started trading, I might have had 100 shares of Amazon. As my premiums have rolled in, I bought more shares of Amazon to the point where I now have 700 shares of Amazon. I assign different strike prices on covered call contracts with rollouts to get different results as to how much cap gains I'm getting when those shares get called away. So you can use your imagination here and see what I'm doing. Puts is a big topic in the options community and with options sellers. I sell puts sometimes. I mostly don't. I have a strong preference for the covered call, and that's because covered calls are more profitable. People argue with me with this, but here's why. You get cap gains when you sell calls. The market is normally bullish, so you're normally getting cap gains over an extended period of time when you sell covered call. When you sell a cash secured put, you never get cap gains and you for sure never get a dividend. You can also collect dividends sometimes when you sell covered calls. So when I sell a put, I prefer to set up a put credit spread to further minimize my risk to the downside. To me, puts have a lot of downside risk in them, and I like to cap that risk or minimize it by selling or setting up a put credit spread instead of selling a straight up put. The wheel, sort of, is missing from my system, okay? So I don't trade the wheel intentionally. That's because other trades in my system have higher rates of return. I use the wheel as a backup trade if I get assigned on a put credit spread or on a call credit spread. If you know anything about options, you probably thought I made a mistake saying that when I get assigned on a call credit spread. I didn't make a mistake here. I assign myself shares as part of my strategy on a call credit spread, and I teach that on my course. It's part of my methodology. So I have not made a mistake there. I've said that very intentionally. Seasonality is very important to me. 6 months of the year have strong seasonal patterns that I know how to trade in alignment with. That is the months of July straight up until the end of December. The stocks that I trade that are the mega caps and the most popular stocks on the market, and when I say popular, I mean they're rising, they're doing well. These stocks trade in a consistent pattern for that last half of the year. I'm able to match my trades to that pattern, and since that pattern happens 80% of the time, I use those odds to cash in. Earnings. I love trading earnings. I don't put too much skin in the game here, so I always minimize my risk. But another way that I minimize my risk and amplify my gains in earnings is that I use time or theta to increase my odds of success. When I buy a long dated call, for example, I make sure that that call is a very long period in time, maybe a year or more, even though I am only playing one earnings day. That is something that really makes me stand out as a trader, and is unique to me. Okay. The other thing is when I trade earnings, I don't look at the earnings time period as though it is a 1 day event. I look at it to play out over a month of time, and I notice patterns with a stock and their earnings over a month period of time, and I use that to my advantage. I've also structured my portfolio to be an earnings portfolio, which might be a new concept for you because I kind of made it up. I have an earnings portfolio. That's what I call it. Since earnings months are huge winners for me, I put effort into choosing stocks to ensure that I have a quality stock pick with an earnings call every month. So a while ago, I started noticing, I would do really, really great when Magnificent Seven stocks have their earnings. Those are killer months for me because I know how to trade those stocks during earnings time. Years ago, a light bulb went off in my head and I was like, well, what if I had a stock that had an earnings every single month? Then every month could be fantastic. So that's exactly what I did. And I went out to diversify my portfolio into having a stock that traded every month, so that I have an earnings period every month. So for me, it goes the Magnificent Seven, some of those stocks, NVIDIA, and Costco. Those are my stocks that I have that ensure that I have an earnings period every month. Limited stocks, I limit the amount of stocks that I trade. I am not looking everywhere and anywhere. I trade a maximum of 8 stocks, and I'm advanced. 8 stocks is a lot of stocks. I'm going to say that again. 8 stocks is a lot of stocks. Usually when people start trading, my viewpoint is that they should be trading 2 to 3 stocks to begin with. 2 to 3 stocks, getting to know 2 to 3 stocks like the back of your hand is actually a lot of work. It's a lot to keep up with. Once you figure out how to trade 2 or 3, you can easily advance into 4 and 5, but you gotta start somewhere, and it's best not to start with a high volume of stocks. It's better to start with a smaller amount and become expert at those. More stocks complicates matters and makes me spend more time on the market without getting any more advanced returns from the market. So I'm fully against that, and I just manage the stocks that I'm in. So again, I go back to my stock buying thing, and if I have a stock that starts failing on me, I'm easy to move out of that stock. I move out of that stock with ease and no emotional attachment and move into something that's better performing. So there's no reason for me ever to have to trade more than 8 stocks. Premiums to buy premiums. So I use premiums to reinvest in long-term holds or other shares, buying other shares for more options trading. I believe in compounding, and I let it work its magic. I'm patient. So this is a long-term game for me. I've just told you about how the diagonal spread is a trade that can play out over 3 years for me. 3 years. So you can see how I'm in this for the long term. Options trading is not a day trading thing for me. It is not something that I'm looking for day-to-day returns on. However, I do have day-to-day returns. My portfolio has become so large that my options portfolio is providing me a daily income, but I am not day trading, okay? So at the beginning of this video, I sent out a teaser that said, like, I can show you, or I can tell you that I can make a 100% return again this year. And how do I know that I can do that? Guys, I'm going to go back to the diagonal spreads. So a diagonal spread, if you know what that is, it is a trade where you buy a leaps call and you sell calls against that call. In 2024, I spent a lot of premium that I made on the market that year buying leaps contracts to sell contracts again for the next 3 years. I am 1 year into selling calls against those calls that I bought. That means I am fully paid back for all of the investment I made in 2024 on the calls that I bought. And the years of 2025 and 2026 are pure profit years for premiums just to come into me. In other words, I bought the house and now I'm just renting it out. That's how I know I am guaranteed a 400K win this year in my options portfolio. Again, I already went over the fact that most of my portfolio is in the diagonal spread. You have to understand, I have to understand how to trade all of these other systems to get to be a master of the diagonal spread, which is why I've gone through all of these trades with you. is because they all come into play at building and managing the diagonal spread. So this is how I'm going to do it, guys. I'm going to do it with the diagonal spread. I have already bought the house on my diagonal spread, and now I'm just collecting my $400K in rent.